Okay, Alessio, I'll just be going live shortly in the next minute or so. Everything's okay?
Yeah, all fine.
Perfect. I'll press start when we hit 11 o'clock.
Thank you. Good morning, everyone. Very good morning to everyone. Hi, good morning. Morning, we're waiting to start. Yes, I'm waiting for the green light to start, and then we'll immediately start with this session. Okay, I believe we can start. I will share the screen now with the slides and everything, so everyone can see. Let me see as soon as it's ready. Brilliant. I believe everyone can see. Okay, so first of all, let me say that it's both a privilege and a honor to be here today to explore a topic which is at the heart of our society. The speed of change in this case is accelerating, and understanding these trends is not just an intellectual exercise, but a need for anyone aspiring to focus on business and innovation. As a matter of fact, in the last years, emerging financial technologies have dramatically changed how entrepreneurs approach the foundings, but also the launching and scaling of their venture. It is crucial to recognize then the significance of this moment in history in general. Then traditional financial models are considered reliable, that was considered reliable for a long time, are now being redefined by technology and globalization. In the meantime, also, a new breed of entrepreneurs is emerging, those who can adapt to this change, driving forward with innovative strategies and ideas. So today we will explore the forefront of these advancements, and these trends are not just mere abstraction, but real, tangible forces. Around the globe, there are startups and innovators that use new financial tools and models to create values, to disrupt industries, and to redefine success. So we want to be among them. And the purpose I envision for these events is to inform and inspire a more specific understanding and discussion about the future of finance and entrepreneurship. Let me shift to the next slides then. So as you can see here, I mentioned the success factors, the factors that I believe are the most important. And I want to direct your attention to these four critical factors. So in this first slide, the most important two are shown, and which is, first of all, scalability. At its core, scalability refers to the ability of a business to expand without being restricted by its structure or available resources when facing increased production. As a matter of fact, we can have now accessibility to information almost for free, or in most cases for free from the internet. So we cannot consider this as a limitation, but the financial resources are always limited. Let's consider Amazon, for example. Starting as an online bookstore, Amazon demonstrated remarkable scalability by diversifying into different product categories and eventually also evolving now into a cloud computing giant with AWS, Amazon Web Services. If we analyze their financial statement, we see that the proportion of the services is growing, while the other one of the selling product is declining. Their abilities to scale up has been central to their success, allowing them to bring a vast global market. Innovation is the second crucial aspect, which is the backbone of the entrepreneurship. It's about, in this case, breaking new grounds and offering solutions that are not just novel, but also practical and desirable. We consider the rise, for example, of the electric vehicles led by companies by Tesla. They didn't just create a new product. In that case, they redefined the entire experience of personal transportation, but also combining elements such as sustainability with cutting-edge technologies. We can move to the other success factors, those that I believe, as I say, the most important ones, that are resilience, the adaptability to change, so which is the capacity to withstand and recover quickly from difficulties. A prime example is how small businesses around the world adapted during the COVID-19 pandemic, for example, as many shifted to online operations, for example, reimagining their service delivery and survive and thrive also amid the new challenges. The last but not least is the business model. I focus in most of the cases with the entrepreneurs that I meet on the essential aspect to make new type of business, not just copy pasting other existing models, even with just only few small changes. A business model in this case defines how the company creates and also delivers and capture values. The emergence of subscription-based model, for example, as used by companies like Adobe, changed the software industries, moving away from one-time purchase to a subscription model, the same as Netflix, for example. Adobe, for example, provides continuous value and updates to its current customers, ensuring then a steady revenue stream and enhanced customer engagement, which is helping, of course, the financing of the company itself. We can then move now to the analysis of the intersection between finance and entrepreneurship. Okay, so the first and most essential question to ask is, what is the essence of business risk? Okay, so I will always curious about understanding the risk, and everyone should be, I believe, because understanding the risk is essential to understand also the opportunities. We will see later with another slide what is the difference among these topics. So what is business risk? Actually, it refers to the inherent uncertainties and potential negative outcomes that business face in their operations and then decision making. And then this risk stems from a variety of factors, including, for example, market dynamics, competitions, regulatory changes, and technological advancements. In this sense, it's worth reminding that both risk and uncertainties are related to future events, usually associated with negative outcomes, but can also offer opportunities. Without these challenges, we never have opportunities to change and to find our own way. So then what is the difference between risk and uncertainties? So risk is usually considered as measurable, so it can also be insured in this case, in terms both of likelihood and impact, while uncertainties, our level of knowledge of the probability is limited. Two critical aspects then of the business that are to be considered in this case. which are in this case represented here. First of all, we have the timeline. So we have the time value of money, a concept that those who study accounting and finance are very familiar with. And so there is the anticipation of cost. This is challenging. As we know, this is generating the financial gap that we need to fill with multiple sources of finance. So every business venture then needs to face some specific cost, which can be both predictable or unpredictable. So the more we can plan the cost, the better we'll be aware about what are the margins, especially when in the business planning phase. So these include, for example, operational costs, the so-called OPEX, or the capital investment, which is called CAPEX, but also regulatory compliance expenses and other financial outlays that are usually necessary to run and grow the business. Effective risk management then requires that a business accurately anticipates these costs and ensures that adequate financial resources are then available to cover them. This anticipation helps in budgeting and financial planning, enabling the business then to maintain liquidity and solvency, even in challenging times. So we need to ensure that there is a buffer of resources in addition to the ones that we planned. This is why, because there is the uncertainty of revenue. So you see, I represented there here very faded, because whilst the costs are for sure, we need to face them immediately. Then we need to wait for the revenues, and these revenues, unlike the costs, are typically less predictable and are also subject to various external and internal factors. So revenue depend on market demand, consumer preferences, or, for example, competitive pricing, product or service quality, effective marketing, but also other factors in general. So this uncertainty is fundamental aspect of business risk, because it impacts, of course, the business ability to generate income and profits. So the timing of revenue generation also is essential. In this sense, entrepreneurs are few because they should be brave, okay, as they do not rely only on paycheck stability. So entrepreneurs, they might have unlimited profit, but they face a lot of risks that are anticipated, while the employees receive a steady income, although this income is unlikely to be scalable. Then, if we consider another essential question here, which stands into the intersection between finance and entrepreneurship. So this is another crucial question to ask entrepreneurs if they want to check, if we want to check if they are potentially successful. And this question is, how do you know actually how to manage your cash flow, especially in the startup phase? In this sense, then, the balancing of profitability should also be paired with adequate management of receivables and payables. So you see, not only we need to focus on the difference between revenue and expenses, because we cannot sometimes even rely on the revenue in full, but we also need to manage the receivables and payables. Receivables, in broader sense, they are considered something good, but in finance, in managing the cash flow, they are considered negative, because it means that we sold products, but we still didn't collect the money for it. So what is the aspect in this case? We need to calculate, in this case, the profit, not only the profit which is generated. So we sold product at a higher price than the price that we paid, or we faced, but also we need to make sure that this profit is collected, is cashed in. But once we also achieve this profit, we need to find a balance. In my experience as a CFO and CEO of companies, I always gave a balanced approach, maybe too conservative. It's up to you. You can choose yours, of course. And I found this triple R that I designed personally, in which I try to find a balance among reinvestment, referral, and remittance. Okay, so the remittance is actually the amount of money that can be distributed as the dividends, for example, in the company among the shareholders. 20% should be related to the referral, to grow the business through other friends, the word of mouth, and so forth. And 30% should be at least investment, so the retained earnings for a company. So these ensure self-financing from the company, other than distributing all the wealth and then asking and searching for finance, which is needed again to grow grow the business. So it doesn't make sense. If we want to continue now, we will focus on the intersection between, again, finance and entrepreneurship. But in this case, we will focus on the capital access. The access is now influenced massively by technologies, and awareness about these new trends usually provides an extremely high competitive advantage. That is why I'd like now to briefly explore the most important trends as anticipated as the broader topic of this session. So first of all, everyone is aware at least about the name of blockchain and cryptocurrencies. So blockchain in a very simple term is a distributed ledger technology. So blockchain is not identified into the cryptocurrency. Cryptocurrencies are just a subset. They are just one function, one use of the blockchain. So cryptocurrencies are digital or virtual currencies that use blockchain to ensure secure transaction and control to the creation of the units. Then we can also discuss who created this, if this code, regardless the implementation is reliable, who is guaranteeing this value. There is no guarantee. Is the so-called people money. We need to trust them if we want to buy them. But it's like we are trusting the normal currencies that are issued by the central banks. So the second one is the mobile payment and digital wallets. So this is another innovation because these are payment services that are usually operated under financial regulations and performed from or via a mobile device. So digital wallets allow the users to store payments information on their mobile devices securely, and also to make payments with a simple tap or a wave of point of sales terminals. So when we tap a card, we are using them. Peer-to-peer, P2P payment platforms, so they are emerging as well. So these platforms enable individuals, for example, to transfer funds from their bank accounts or credit card directly, or another individual account via the internet or mobile device. Again, in this case, by bypassing traditional banking infrastructure. So this is a crucial aspect, as we will see later when we were going to talk about the money in general. Then we have also robo-advisors. These are more related to the investment side rather than raising finance, but we can also have neobanks. The neobanks are usually online-only financial institution. We cannot find a branch for these banks. So this side, there is also the other label for the challenger banks that are mainly online, but they still have a few physical locations. Actually, the trend is that all the neobanks now they turned into challenger banks just to have at least one physical point of contact, at least in the country in which they are based, just to ensure to reassure the investors. Then we can also have insurtech. So this refers to technology innovations that are designed to squeeze out, for example, the savings and efficiency from the current insurance industry model. And we will see later how they can impact. RegTech is related to the regulatory technology, which is another field, which is pairing the financial services and innovation. Of course, the laws and the regulators, they struggle to keep up with the level of innovation. So to issue a law, it takes time. So that's why there is the need also to be more flexible and more adaptable and seamless in generating new regulations, because the financial sector should be remembered that is based on the public trust. Okay, so if we affect the public trust, then we can have bad consequences based on scandals or other things like that. Open banking and APIs. So I wrote recently many papers about APIs in general, because there is the kind of integration of application for programming interfaces. Open banking is a banking practice that provides usually third-party financial services providers open access to consumer banking, but also transactions and other financial data from banks and non-financial institutions. Then we have contactless payments that are emerged of those that we already mentioned before. There are contactless payments, there are payments that are processed that require no physical contact in this case, and even between consumers payment device and the point of sale, the POS. And then decentralized finance is more related to the emerging financial technology based on secure distributed ledger, similar to those that are used by cryptocurrencies. It removes, in this case, the control banks and institutions have on money, financial products, and financial services. So we need to make sure that these are related to systems that are at least reliable. Then, of course, there is a huge hype on financial artificial intelligence and machine learning in finance, with all their techniques that can be used for applications, including training, investment, or also fraud detection and customer service, so they can help in many ways. Crowdfunding and crowd lending platforms are now one of the most important ones that we should focus on, because these platforms allow individuals in a completely new way, and businesses also, to raise funds and for projects and ventures by receiving small amounts of money from large number of people. In the past, there were bonds that could have been subscribed by everyone, but now we can also have these kind of platforms that are not truly regulated, but they are more immediate and seamless in terms of financing itself. So crowd lending is a subset where individuals lend money to others in exchange for interest payments. Then we can also focus on biometric security systems in finance. So in this case, these are security systems that use individual, of course, unique physical characteristics, such as your fingerprint or your face or whatever else. And e-commerce financing solutions also are very important, because these are financial products and services that are designed, in this case, to support e-commerce businesses. And these include, for example, merchant cash advances or lines of credits and invoice financing, those that are focusing on the working capital financing of the company itself. We can now focus on one, as anticipated, on the analysis of the money. Okay, so this in finance is considered as the aggregates of money, but the most surprising thing for most of people is that the central bank money is only the first part. So the money which is issued by the central bank, that means physical banknotes or coins, and also which is called currency circulation, which is usually risk-free, because it might be backed up by a central bank which is powerful, but it doesn't mean there is any correspondence, for example, to precious metals such as gold and silver. And we have the commercial bank money, which is created by the banks, okay, with a mechanism which is called the fractional reserves. Okay, so central bank money consists, in this case, of physical currency, coins and notes that are issued by the central banks, and reserves also held by commercial banks in the central bank itself. And these reserves are, as we say, they're not directly accessible to households and businesses that are crucial, of course, to the banking system functioning. In the broader sense, a surprising yet insightful statistic comes at the forefront, since the only 5% of the money held by the households in the form of central bank money is only 5%. So the remaining amount, which constitutes the staggering 95%, exists of the digital figures, only numbers on the screen or electronic devices of the banks, represented as bank deposits. These are not physical cash, but they are accepted by a means of payment, effectively functioning as money, because it has the three functions of money, which is means of exchange, reserve of value, and unit of count. The statistics in this case illuminates a fundamental financial change in this paradigm, because from physical to digital money, which created an innovative financial service. And of course, the tangibility of cash gives way to convenience and, of course, ubiquity of digital transaction. This shift just not a change in the preference, but also a transformation which is allowed by the technologies and also by the nature of the money as we know it. So when we speak of central bank money in the hands of the public, we refer as a surprisingly small fraction of the overall monetary system. This is then a testament to the trust and confidence that the public places in the banking system, a system where digital entries can fulfill all the function of money, although it's created by the bank itself, is not supported in full by the central bank. However, this brings forth new challenges and risks, of course, particularly in the digital security and the integrity of the financial system. And in this case, we can also mention that this is not even enough, because this is the money only created by the commercial bank, and all the other non-bank money, which is the e-money, for example, PayPal or any other system. So it's additional money in addition to these aggregates that we know. Then, when we focus on entrepreneurs, the entrepreneurs, from my perspective, they should focus on the aspects that mostly impact their success, which are the leverages. So in this case, the leverage in finance, but also tax planning and operational leverage. In this case, for reason of time limit, unfortunately, we cannot, we should bypass the leverage of creating and holding control. That also is another powerful tool. So analyzing then the anatomy of this case, so I presented a business case, which is, for example, an investment in real estate. In this case, we want to buy a property for $250K. So we have two choices. Okay, so of course we are considering this as an investment, not to live in. Okay, so we have the chance to invest only in equity and also with our savings, or to borrow money, for example, up to 70% with an interest rate of 5%. Let's see which one is more beneficial, because as an investment, of course, the investment will return you exactly the same rent. Okay, so regardless if you finance the amount only with your savings or with a mix of savings and debt. In this case, the market will decide the rent, and of course the expenses more or less will be the same if we are focusing on operating expenses. But then that is when something changes, because of course if you finance the business or the investment in general with only equity, you don't have to pay interest. But in the case you finance it with debt, of course you have to pay some interest expenses. But then you notice also something else, that if we apply, for example, as a simplified model, 9%, which is the income tax rate for the corporations here in the UAE, to the earning before taxes, which is 20% in the first case and 11,000 for the second case. We notice that the person that financed the investment only with equity is paying more taxes, because it's calculated on a higher investment. But if you can notice here, which one is the most rewarding investment? Apparently, we can say, okay, so which project return more earnings for the shareholders? And apparently we can say, oh, 18,000 is much more than 10,000. So we might try to be tempted to focus on equity. But then we can calculate the return on investment. The return on investment in general is considering the ratio between the operating profit, which is the EBIT, over the amount of investment which is done, which is 250K. So in this case, it's 8% for both of them. So, but when it comes the difference, the surprising difference, the difference comes when we calculate the net return of the shareholders, because the shareholders, thanks to the tax shield of the taxes, that because we can of course deduct the interest expenses from the taxable income. Okay, so but not only this, we can notice, of course, that that more or less the The return of the second case, so buy the same investment with a mortgage, is returning almost double the return. But why? Not only because of the taxes, but because they invested much less. Okay, so we don't have to compare 10,000 earned from the net earnings with 250 in this case. We need to compare it with much lower amounts. So actually, we are investing someone else's money at a rate which is at 5% to get an investment which is providing us a return on investment of 8%. So the spread between 5% and 8% of the ROI, of course, is giving us a lot of additional competitive advantage. And this is the financial leverage. As we say, it's not only enough, because we can also massively work on the taxes aspect, so we can keep the same case, such as the second one, the one that with the borrowing money. The expenses, the interest expenses, are not only the ones that are generating the massive advantage for us, but also there are many other legitimate tax deductible expenses that can reduce the tax burden. And that is what all the multinational corporations are doing. So, for example, they are charging royalties or rent leases for also personal reasons, but they are also charged for the company itself, or renting a car rather than buying it, and management fees. So all these cases, the management fees, for example, if we are also entrepreneurs, so we are assuming that not only we are the shareholders, but we are also managing the company, we can also attribute to ourselves, for example, an income, a fee, a salary, okay? So in this case, we prefer to have a salary rather than paying taxes and then distributing dividends, because they are below the EBT, okay? So if we want to make sure that the income tax charges will be much lower. And then we can continue here. We also have the operational leverage. Okay, so operational leverage depends on the structure that we have. We might decide to have a lot of fixed cost or prefer variable cost. The option of the variable cost, for sure, it's the safer one. Why? Because we don't have to face any cost. So if we have no sales, we have basically more or less no cost. But of course, it's the one which is also affecting our profitability and margins, because the more we grow the sales, the more we will have to face cost. When we have fixed cost, of course, at the beginning of the company, at the startup of the company, we might face a higher risk, because first of all, we will have a higher break-even. So before achieving a profit, it takes more time, but we also face fixed costs regardless the sales, so that we know that they are uncertain. So we can try to have an adaptable approach in which we prefer variable cost at the beginning, and then once the business is more stable and mature, we can turn into fixed cost immediately, so we can benefit from the margins. Okay, so what are then the current trends? Okay, so if we analyze the anatomy of the contemporary business strategies, it becomes clear that operational leverage is not merely a metric, but also a comprehensive approach. Okay, so enabling organization to manage the current economic variability, but with agility and foresight. So among these key aspects, we should then consider, for example, first of all, digital transformation, intended to integrate digital technology into all business areas, fundamentally changing how businesses operate and deliver value to customers. It's not simply then about upgrading system, but also reimagining old models in general. Then there are remote work models that are now avoiding the companies to pay a lot of expenses for the offices. And also they were, of course, triggered by the forced lockdowns during COVID. Of outsourcing non-core functions, that is another option to leverage through the operations. So we can outsource services, we can turn fixed cost into variable cost at the beginning of, especially at the beginning of the startup. Then we can also have cloud-based solutions. So the migration to cloud solution offer a better infrastructure, which is also scalable and will avoid to face a lot of high upfront cost for the acquisition of the hardware. And then we have also investment technologies that might be cutting edge. They might give us some competitive advantage compared to the other competitors. Then we have standardization, scalability, as we already mentioned, and also, last but not least, the data-driven decision-making. Now we have a lot of softwares. I don't want to mention one in particular for obvious reasons. But we can have decision based on robust data analytics that can be processed with many software, the ones you prefer. Then we can focus now on financial technologies innovations. So it might be more interesting and relevant. So we can have mobile applications. All of them there are mentioned here. So we can have peer-to-peer lending, for example, blockchain that we mentioned before, the distributed ledger, robotic process automation that, for example, is the core of the Tesla strategy that automated most of their processes in general, artificial intelligence, and so forth. In the current trends, we have financial fintech innovation, crowdfunding and crowd lending, venture debt, and so forth. So I believe we can skip these slides because we already mentioned most of the cases. I don't want to run out of time in this case. So let's focus on traditional financing and compare it with the modern financing method, because this is very important to us. Okay, so we have, in this case, to compare, for example, the difference between bank loans and crowdfunding. So bank loans have long been the cornerstone, as we said, of the business financing, providing a structured and sometimes inflexible, however, source of capital. In stark contrast, of course, the crowdfunding is a new era of financing, leveraging, in this case, the collective power of individual contributions to turn eventually entrepreneurial dreams into realities. Then we can have venture capital that is a part of the current still traditional method, but it also can be compared with the peer-to-peer lending platforms that democratize the lending, for example, enabling individuals to lend and borrow funds directly among each other, and bypassing the traditional financial institution. Angel investing has been also always a popular traditional type of sourcing of finance, with individuals providing capital to startups. And these forms of financing is being complemented in this case by revenue-based financing. So where the investors receive a percentage of ongoing gross revenue in exchange for money that is more direct. We can have personal savings, of course, which is the most basic and traditional way to support the company. But also we can now launch initial coin offerings or security token offerings that provide formalized and secure means of raising funds by issuing digital assets that might be traded in the markets. Of course, we can focus on government grants and compare to online business loans and corporate foundings that can be done in the two forms of corporate finance or project finance that is usually very popular still now. But now we can have also microloans, so that are facilitated by non-profit organization and online platforms, and they are now this is designed to support small-scale entrepreneurs who may not qualify for traditional bank loans. We can also have convertible loans or equity crowdfunding in general. What is the most important thing then to consider in fintech entrepreneurship? So I consider these three sentences as the remarks of all the thoughts that we had. So fintech entrepreneurship is not just about reinventing banking, it is about reimagining our relationship with money. We know that money is much more flexible, but also less safe than before. There is the fractional reserve, which is affecting, of course, the reliability of the central banks, but also is enabling the growth. Okay, the growth of the company. So imagine if we could rely only on the 5% of the bank system, of the central bank system. All the business that we see around, they could not exist. Okay, because they are all financed with most of the cases by central bank money. At the heart of the fintech innovation lies a simple truth: access to finance is now universal as internet itself. So it means that we cannot only focus on the traditional banking system, but we can rely on many other sources also democratized by the systems and platforms that can enable all these aspects. So what are the skills that we need to consider? Apply artificial intelligence and machine learning knowledge. So these are the engines of personalization and predictive analysis in fintech. Entrepreneurs with applied knowledge in these areas can leverage algorithms and gain customer insight, then of course enhance the decision making. Also blockchain familiarity, especially if we want to develop new cryptocurrencies on our own and create our platforms, but also we need to get a lot of cybersecurity expertise, because we can expose our bank accounts to phishing attacks or whatever thing. So all the good things that we can build can be lost in seconds. Big data analytics, but also understanding of the regulatory of the RegTech, but also user experience and user interface, API integration, as we said, and so forth. Then we want to focus on very quickly on few cases. As we mentioned, one of the most popular platform is PayPal, that started in 1998. Then the name was since 2001. The services that are provided in this case are online payment processing, digital wallets, and so forth. But what are the true reasons of the success? Pioneering, in this case, the online payment solution outside the traditional banking system. And they raised the trust, which is the most important characteristic for any fintech. Square, for example, got his success to the early focus on answered small businesses, simplified transaction process, and strong brand recognition. Robinhood, so attracting a new, younger demographic of investors, simplifying the investment process, leveraging technologies for a seamless user experience. So you see, they found their niche, they found the business model, they created a new business model, and they scaled the business. So these are the aspects that are common to any type of business which is in this field. Stripe, streamlined, in this case, the user-friendly interface is one of the most popular for e-commerce. Ant Group is pioneering in mobile payments and digital finance, strong backing Alibaba Group in this case. And Sophie, which is also another important case that started with student loan refinancing and then expanded to other aspects, so scaling the business once again. But there are also unsuccessful stories of frauds, such as the case of Wirecard, that lost 1.9 billion from its accounts. So, and there is still an undergoing prosecution and case in Germany. So as you see, since they are less regulated, and in that case, the RegTech mechanism didn't work very quickly, so they could leverage the fact that they could not be overseen immediately by the central bank in that case. We can have blockchain applications that are very popular. In this case, not only cryptocurrencies, some of them are them. I will make sure that you will have these slides available so you can revise them on your own if you have time. If we want to focus on crowdfunding, specifically in the UAE, I found these three cases that are Beehive, Eureka, and the Dubai Next. So these are the references for those who are seeking for foundings, for example. There are not only these, of course, but here you can see the types of financing. For the first one is debt financing, in other cases is equity, and the third is a mix. If you have a small medium entity and a growing business, you can finance in all the cases. So the crowdfunding, however, in the UAE is regulated by the Emirates Security and Commodities Authorities, and the rules and regulations governing the crowdfunding have evolved over the years. Many applications in AI and ML, as we said. So let's quickly focus on the last aspects. So first of all, we can have positive and negative aspects and concerning aspects for the digital payments. First of all, they helped business to grow. Why? Because they integrated the traditional banking system. So they offer instant payments. They made happier customers because we can have multiple ways to pay, not only cash or card. We can have multiple other applications. We can witness this as a checkout of any business. We can go digital, get ahead. Accepting digital payments boosts sales and customer loyalty. So all the businesses are interested in accepting all the types of payments, so they will not lose any type of customer, and they will make them comfortable in paying in any possible way. They ensure efficiency. We need to focus on efficiency, security, and convenience, so we can focus on this aspect. And also the digital payments are the passport to the global markets, because the more we can be familiar with different types of payment system, the more we can be integrated globally. The concerning aspects are the pitfalls. Of course, there might be transaction fees that are not truly regulated by the central banks in this case. Cybersecurity is another case. Or let's think about, for example, also the case of potential frauds, such as the case of Wirecard that we mentioned before. Then we can have cash flow hassles, because delayed settlement in digital payments could affect your business, because we can trace back all these transactions only after a lot of time sometimes. And if you are excluded by the system, then it will be also challenging to get in touch with the system operator in this case. And payment data privacy also is another concern, because we don't know exactly we cannot know exactly how our data, especially financial data that are very very sensitive, they are managed. The last thing that I want to focus on is the critical aspect of the intellectual property, because whenever we are raising funds, we need to contact someone and we need to disclose our project, because they want to know which project it is. So the question is if the NDA, the non-disclosure agreement, is safe or not. And the critical aspect is the enforceability. So even if we sign an NDA, we can never be sure that this can be enforceable. So that's the thing that I perceive that is eventually concerning a lot of entrepreneurs. And this might be a way to focus the new research and especially the policymakers to build trust on this aspect, to make sure that the NDA can be enforceable. So as you can see, I wrote many books recently in these aspects related to business analysis of the history of accounting, and also specific application in Excel. And you can feel free to get in touch. So these are the QR codes for my LinkedIn profile and the Google Scholar profile if you want to explore more my research. And these are my email addresses, personal and institutional, from my university. And now I believe we can have time for the Q&A session. So, if you have any specific question, just let me know. I will go through eventually the chat. I can see, thank you. I need to go back. If you have any specific question eventually that you want to discuss, or you already asked before, so please feel free to ask now. So you can just copy paste the same question that you asked before, so I don't have to go through the previous messages. I might miss something eventually. Okay, so someone has the triple-R ratios good for big companies or startups. I believe there are always different balances. For sure, there is always a triple R, okay? So that means that you need to save money for reinvestment that are considered retained earnings. A wealthy reinvestment of the earnings is always the higher the better. And there are investors such as, for example, Warren Buffett, that always reinvested everything, always to avoid paying dividends, for example, okay? And because the dividends, they can generate taxes, okay? So the answer is not always, or is the balance that you might have, which might be different in different stages of your companies. Then, okay, so the triple R. I don't know if there are many other questions. Okay, so I believe, of course, that you will have access to the session recordings, and feel free to email me if you want to get also the slides. I can share them directly with you, also the slides, by email anytime. And don't forget to get in touch also in LinkedIn, and just anytime you want to get access also to my research, you can download everything from Google Scholar. Most of my research is open access. Okay, so now the recordings can be found in the main website. Thank you. Thank you. Most welcome. Okay, I believe there are no more questions, and thank you very much.